Hi, this is Mark with your analysis for the year commencing 2014. For something a little different today, I'm going to have a look at where I see currency pairs going for the year ahead. It's very difficult at the moment, this is the caveat, because of the fact that so much manipulation is being going on. I mean, I'm sure that the Fed and the ECB and the other big boys are manipulating currencies, but from a technical perspective, this is what I see for the year ahead. As you know, I have concentrated in 2013, wherever possible, to make trades from weekly analysis. Simply do my analysis on a Sunday and then place my orders on a weekly at the market open. And to take this now to another level, this is the CAD, and the CAD on a monthly. Last month we'd had a break and close above the all-important 105.50 area that I showed you. As ever, I look to place my entry 10 pips above. And had you just traded this on a monthly chart, this worked for 200 pips. We got the break in November. December, the pullback came back and retested the area, and off it went. It's even clearer here on a weekly. Had you decided to take this from a weekly, we'd had the break in November. We have the pullback here, 10 pips above to make sure we don't miss the entry. And that's that 200 pipper. So what am I looking for this year? Well, we have clearly broken and closed above an area. And as ever, that resistance now becomes support. Technically, we're above all the EMAs. We bounced off the 100 earlier in the year. In the last 4 or 5 months, notice how support became resistance here. And we had a lot of winning trades from monthly and weekly analysis. So I will be looking for pullbacks to 105.50 area again for potential longs. And if it breaks and pulls back, then I still only want to long this pair. And the next line in the sand, even better entry perhaps because of the EMAs in the area as well, is 104.20 area. So only interested to long. It's only a couple of years ago that we were up at 130 with this pair. And I remember trading this back in the day. I think it was 2002-03 when I started trading. We were up at 160 on the CAD. So we've cleared all the EMAs, we've cleared all the potential obstacles. We could be on for a major run up on this pair, and that is all I will be looking for in the foreseeable future. Now this today is the 29th of the month, and therefore the monthly candle close will not happen till tomorrow. But this is the Aussie dollar. The Aussie dollar has been moving down, and earlier in the year we had bounce back up from 8,900, and it was from weekly analysis. I'll re-show you that in a moment. But I'd said to you pre-Christmas, this 8,900 is the key area. It just depends what happens tomorrow with this pair, because at the moment we're looking as though we are going to close below 8,900. If it bounces and closes back above 8,900, then in the short term I'd be more inclined for price to pull back. But my overall aim with this pair for the coming months is shorts. The Bank of Australia have said they want the Aussie dollar to be down around 0.85 rather than messing around with interest rates. And when central banks tell you what they want to do, generally that is what will happen. So the ways to play this, ideally you want to pull back. Now previously we had a move here and we'd got the bounce back up, and then we started looking for fibs and EMAs, etc. for a move back down. Previously it moved up to the 50% fib and back down, and there are also EMAs in that area. So ideally we want to pull back again. I'll show you that in a moment. But if this price closes where it is, or even better, a little bit further down, then we've had a break of a major line in the sand, which was previous support and resistance back in 2009 and 10 and 7. So it's a major area. Therefore you look for a break and close and a pullback. But as ever, if we can get a bigger pullback, that would be the ideal. And this is the Aussie dollar, same pair on a weekly chart. And remember, back in the summer, we were talking about the potential bounces back up at 8,900. We had a major move down. It started to look tired and exhausted. You had the opportunity aggressively here and a little less there here. And one of the clues we were looking at was MACD divergence. Price had clearly been falling, and yet MACD was going back up. And we have it again. We have MACD divergence here. So as I say, this 8,900 is crucial tomorrow. If it pulls back up, then what do you start to look for? Well, I will be looking for potential pullbacks 9,400 and ideally 9,600. If it gets up to 9,600, I will be inclined to go in heavy on this pair. I would have my stop aggressively. You could go just above the EMAs. You may even go all the way here, 250 pips away above 9,800. Because remember, if you're trading this on a weekly or a monthly, you're looking for big moves and you're still looking for the same risk reward ratio, at least more than double what you are staking. That would be the aggressive stop. That would be more conservative. But that is my goal with the Aussie dollar. Ideally, a bigger pullback, but I am interested mainly in shorts. As I said, intraday, if this does close above, okay, we start to think intraday for early January for moves back up. But if you were going to trade just with the trend and you're going to trade off monthly, wait for this to close or wait for a pullback. Euro pound, very similar scenario. Euro pound, we've had now 4 or 5 months of lower lows. Price has clearly been falling. It is sat on 8,300, which is also happens to be a 55 EMA. Ideally, what you want with this, if you're going to trade it from a monthly, you wait for a break and close below, then a pullback and a view to a fall. And it's only a year or more ago that we were down here around 7,800. And looking across to the left, 2007, 2008, this was a major area. I am only interested to short the euro pound this year, certainly for the first few months of the year anyway. And the ways to play it, I will either look, as I just told you, for a break and a pullback and a short, or I want a pullback. And pullback, lines in the sand, I'm in this from 8,400. And we'd had it, I showed you earlier in the year, this pair seems to respect whole numbers more than anything, 85, 86, 87. But if it pulls back, I would take again. And if that lost, I would take again. But for me, fundamentally and technically, the euro pound, I'm only interested to short. This is the dollar yen. And clearly the dollar yen finally broke above 100. We then started to follow it up with our support and resistance lines. And we were looking for a pullback to 101.14, didn't quite get there, missed the entry. Now we've broken above a monthly 200 EMA. I say we've broken above, we have to wait for this candle close. Barring a major pullback tomorrow, then I will only be interested January, February time, looking for longs on this pair. And again, I remember trading this when we were up around 120. So we have the potential here for a big move. And the dollar strength seems to be impacting more on the Japanese economy than any other. We could, of course, start putting trend lines on here as well to look for extra reasons for entries for trades. As ever, I need a pullback. The more aggressive pullback would be back to this 200 EMA around 10300, and definitely if it was to pull back anywhere around 100. And the further down this gets, if it gets down anywhere near 100, 101, I would go in heavily because of the fact I would be looking once again for a potential many hundreds of pips movement on this pair. Euro yen, similarly, Fotis had suggested a few weeks ago that we were on for 14500 and we're almost there now. Again, we've had a major break, Bollinger Band wide open. We are now above all the EMAs, all potential obstacles are out of the way. This was previously up around 168 back in 2008, so we've lots of room to go here. As ever, we need a pullback, and the more conservative pullback will be all the way down to 13900, 140 even. If not, what you have to do, you have to start thinking in terms of trailing the movement up. So if we were trading this on a weekly, our next support and resistance area here has been around 141. So on a weekly, price did break and close above, then pull back. So that would be the way to play it. So if this just simply keeps on going up, you look for pullbacks along the way to get a better entry. Euro USD, very difficult for me. Fundamentally, I think the Eurozone, there's a lot more dirt to come out. I think the Italians are hidden stuff. The Spanish are now trying to talk things up. But living here in Spain, the economy is still in a dreadful mess, and certainly any signs of coming out of recession have not hit the man on the street at all, certainly not hit the unemployment figures, And personally, I think there's a lot more skeletons in the cupboard as far as Europe is concerned. But technically, what's going on? Well, we've had a break. It's on a weekly. We did previously stop at 61.8 fib. At the moment, it's trying to break that area. Here, I would be interested for a pullback to 133.00, well, 133.40 for a potential move back up. And in the shorter term, I would also be interested for moves back down from 138.00, because look, if we stay as we are now, we've had 2 or 3 months of indecision candles, we've had clear rejections, this is a pin bar reversal candle, we've also got MACD divergence. So I'm not really planning any major moves with the euro in terms of monthly moves for the year ahead, because I really don't know whether the Fed or the ECB are going to manipulate this pair the most. But technically, that is my short-term outlook. Dollar Swissy, another one. If this closes where it is now or any lower, then definitely we've had a major break of 90, and that will be the first time in 2013, going back actually to 2011, that we've broken this area and closed below, if that is what happens tomorrow. So technically, a break of 90, you're looking for pullbacks again. The first pullback is clearly 90 and a move down. If the pullback is more severe, then I'll be looking around 9200, where we've got a plethora of these longer term EMAs. One caveat with the Swissy is the Swiss National Bank are not averse to intervening on this currency pair. And it happened before, back in 2011, where they didn't want their currency to get too strong. And they've done it with the euro in the past as well. And there has been a suggestion they've been doing this at 90. So we'd have to watch carefully tomorrow to see what happens. But technically, we are only looking for shorts on the Swissy. And again, as we were showing you earlier with the CAD, if this pulls back even further, let's say it gets all the way back to 9600, I would go in more heavily. So my bias for the year on the Swissy is short. It's the British pound, and another one like the CAD. Shown you in November, we'd broken this area of around 163.00. You look for the pullback with a view to a continuation move, and it worked again. So that, having traded purely off a monthly chart, has given you a few hundred pips profit. So what happens next? Well, we've got at the minute a 200 EMA just above, which is a little bit nasty. The ideal scenario for me here again is a pullback to 6300. Fundamentally, I think the British economy is in a better state, certainly than the European economy and the US, and therefore I do expect further movement. It's not that long ago, 4 or 5 years ago, but we were up in the dizzy days of £1 British to $2 plus, and therefore there is potential for it to go. Difficulty at the minute then is this 200 EMA. So if you're doing this on a monthly, you're looking for a pullback, or you look for a break and a close above the 200 EMA, then the pullback for the continuation move. And again, we've got this trend line in place that's now been going back 7 or 8 months as well. So lots of reasons for support and for entries. So you're looking anywhere along here. I'm only interested to long the British pound on the longer term. Shorter term, this is the same pair on a weekly. We've got this EMA just above. So those of you swing traders will be interested for a move back down here. But for me, as I said to you, I'm only interested to long, and I've shown you the area that will interest me the most. This week being New Year, there's bank holidays. Some countries have got bank holiday, 3-day bank holidays. So definitely not a week for me to trade, and I strongly recommend that you don't either. Let's see how this pans out for the year ahead. I'd like to wish all members a happy and prosperous new year. Omar is starting his groom project in the next week or so. Lots of new and exciting things to come here at Forex Mentor Pro. Have a great week, the week ahead, and I'll see you next week.